Thanks to the organizers for organizing such an impressive conference. I know this is student-run, and as we would say in Hebrew, kol hakavod, which means really great. You guys deserve a big round of applause. And also to all the attendees, I've had several conversations with people, and I think it's really exciting what's going on. I'm going to bring in a little bit of economics here. We haven't had much economics, had a little bit. We're going to have economics and real data analysis. Okay, so a little bit different than what's been going on, but something that I think is important. I'm one of the few economists, actually, who works on the economics of cybersecurity. I've been working on this since about 2005, and specifically on the economics of cryptocurrencies since about 2013. So we have a long-term project going. This is joint work with my colleague Tyler Moore at Tulsa, computer scientist. It's a fertile cooperation between economists and computer scientists, and JT and Talia are our wonderful RAs. And I think we've got a really interesting talk today. And it's relevant because even though I'm going to talk about something that happened in 2013, the dynamics look pretty much like what's going on today. So you might want to be shaking in your boots if you're a trader, so to speak. Okay, so this is what things looked like in terms of the Bitcoin US dollar exchange rate through early 2017. I know that I haven't shown what's going on in most of 2017 because I want to save that for a little surprise at the end. But, you know, there's these two famous periods, indeed, when bots were operated on the Mt. Gox exchange. Mt. Gox had most of the trading in BTC, US dollars, back in this period. We're going to look at a one-year period, basically from basically 2013. And during that period, except near the end, Mt. Gox was the dominant exchange. And there were several bots that were operated, which we suspected were run by Mt. Gox, and only after we got the first version of the paper out did the owner of Mt. Gox admit that they were run by them. So anyway, those are the periods, and you can see the yellow and the blue. Okay, and just to give you a little bit of spice, I mean, what we're going to get up to is, so we have these bots which are named Willie and Markus, simply because that's what the blogs called them. Okay, the Markus bot was active primarily in the third quarter of our data. We basically have 4 quarters of data, and we've split it that way. In the first 2 periods, the bots were not too active, and not much happened in terms of the change in Mt. Gox's daily price. So, you know, in terms of the first period, 21 cents per day. And of course, the percentage was higher. The next row is the percentage, but basically not too much happening. Still, 1% return is not bad. In the second period, it went up to 1.8%. And then all of a sudden, in the third period, this bot begins to be active a lot. Now, fortunately, for those of us who analyze data, the bots were sometimes active and they were sometimes not active. It's a perfect natural experiment if you're trying to look at this. If they were active every day or never at all, we couldn't decipher this. But you can see in the third period that this bot begins to have what looks like some effect. Let's not conclude yet. In terms of percentage returns, you can see it's pretty non-trivial. 3% per day? Give me 3% per day on anything, you know, on any asset. That's a wonderful return. And then look what happens in the fourth period, when the second bot is in operation, which is called the Willie bot. Now, the Willie bot was wonderful because it was active on 50 out of the 91 days. So almost half and half. It's a wonderful split for someone doing data analysis. And look what happened when it was active. Those days it was active, 5% returns. On the other days, negative returns. Same for the Markus bot, by the way, just slightly less in terms of numbers. So we're going to take a look at this in detail. We're going to talk a little bit about the traders. I don't have too much time, and I know you guys are tired, so I'm not going to go into too much detail about the traders, but I'm going to show you some interesting things that we find, and I'll show you why it's relevant for today, too. Okay, so get back into 2013. For those of you who are here, and I'm really sorry that, actually, I was looking at this in 2012. I'm sorry I didn't buy Bitcoins then. But, you know, you live and learn, so to speak. Okay, I still didn't buy any Bitcoins. But by 2011, Mt. Gox handled most of the trade in BTCs versus US dollars. And here you can see what it looks like. Mt. Gox is the red. And you can see, though, as our data, you know, comes into play, which is the yellow and blue lines corresponding to when those bots were active, you can see that Mt. Gox's share is going down for various reasons, which we'll talk about. Still, it was very, very important. Okay, in early 2014, Mt. Gox folds. Most of you guys probably know the story. Bitcoins were lost, and that's one of the reasons we think these bots were operated. And fortunately for researchers, we got data on 18 million transactions. Now, what's special about this? Because, you can usually get a lot of data from the blockchain. But here, we know the identity. I mean, we don't know the personal identity, but we know whether the particular trader was active more than once. Indeed, for these bots, so we see that this bot was active today, tomorrow, the next day, then was shut down for 2 days. And that's really great. By the way, it was a little more complicated in the Willy bot because they tried to fool us, not us only, but tried to fool everyone. So the bot had different accounts. There are many, many different accounts, but we're able to piece it back together and trace it back to the same actor. So wonderful data that you don't usually get. By the way, interrupt me if you guys have any questions. Okay, so I basically said that, and there were some blogs that talked about this, and the fact that something strange seemed to be going on. So just a quick summary of what happened with this Markus bot. So what was going on here is this bot supposedly acquired Bitcoin, but it really didn't. The trades did not exist. Okay, this was manipulated within Mt. Gox. So why do something like this? Well, the volume of those trades were reported, and they are a huge percentage of the volume on Mt. Gox. And not only that, we show in the paper that the trading at other exchanges during that period, and I showed you that the other exchanges like Bitstamp and Bitfinex and BTCE were becoming more important. The volume shot up on those exchanges too. So what these things did was they created an interest, kind of like these, pump and dump schemes, so to speak. Basically running stocks. We've seen it before. Okay, so again, no real trades, but an effect on volume. And I'm not going to go through the details. You can see all that stuff in the paper. Okay, the Willy bot wasn't just one account, but a collection of about 49. And, again, fortunately for our data, it began trading in 1 quarter, was active for about half of the days, and then when the Mt. Gox exchange shut down, basically everything ended. But it had a very interesting pattern of buying. Now here, unlike the other bot, this one actually interacted with real users. So what it was doing was buying Bitcoin, it was actually acquiring Bitcoin. And so if you sold it to me, those Bitcoin, then you would get some fiat currencies like US dollars in your account. So this was really going on. But remember, again, it was being manipulated by Mt. Gox. And again, the same thing happened. Huge increase in volume and big increases in all the other volumes across other volumes. It also had another effect for those of you who are familiar with Ponzi schemes, even though I want to get into this too much. But there was a deficit at Mt. Gox, about 1 million Bitcoin deficit, which happened in 2011. In 2011, the Bitcoin wasn't worth anything, so who cares about 1 million Bitcoin deficit? But in 2013, it was worth a lot. So that's a huge deficit. This enabled Mt. Gox to stave off collapse, at least for a while, because what it did was it converted the deficit from a Bitcoin deficit to a fiat deficit, because it was buying the Bitcoins and giving you back the currency. But you know what? You couldn't withdraw it from your account. Okay. If it had been Bitcoins, they would have had to let you withdraw it from your account. But not everyone was able to withdraw. Okay. So that's what happened. Remember that we can show that these bots had a huge increase on volume. Okay. And I told that story. And again, the key thing is that there's large volume increases. And for those of you who followed the Bernie Madoff story and say, this kind of stuff is impossible, well, he did it on a big scale too for many, many years before it inevitably collapsed, because Ponzi schemes have to collapse. But anyway, it gives us a chance to study what happened. These markets are thinly traded. Back when we started looking at our data, the market capitalization in all of the Bitcoin ecosystem, so all the coins, and there were only about 80 back then, was about $14 billion. Now what is it today? About 10 times, right? 140, $150 billion. But you know what? There's not just 80 coins. There's 842 coins that have some trading going on. So again, very, very thin market. So could this stuff be going on today? We'll take a look at the end, and I think I'll talk you through it a little bit. Anyway, you can see, even though it's hard to see here, basically the percentage of volume that was accounted for by these bots. I think it's easier. Sometimes it's easier just to see a table. They accounted for 21% of the volume in Mt. Gox during the first bot period and about 18% during the second period. And if you looked across all the exchanges, it's 12% and 6%. So it's a lot of volume. But more importantly, they essentially doubled the volume the total volume, even more than doubled. If you look at the paper, you can see that the total volume traded on the days when these guys were active was unbelievable. And when they weren't, the volume dropped, plummeted in a big way. So that's what these guys do. And you can see, just like looking a little bit without doing any formal analysis, that on the days that those bots were active, the price went up a lot. Okay, on the days when the STE means suspicious trading activity. When there wasn't any suspicious trading activity, about half and half. Sometimes the rate on Mt. Gox went up, sometimes it went down. You saw actually that we said it, it basically didn't change. When you get into the regressions, I don't know if anyone knows what a regression is, but some of you guys do. Okay, we'll see that on the days these bots weren't active, nothing happened to the price. Okay, but on the days they were active, lots happened, and you can see basically on the days they were active, most of the days where they were active, the prices went up. 80% of the days. That's a lot. Okay, so again, we're talking about this period, and I'm just to remind you. But this doesn't show anything because, lots of other things might have been going on. Suppose it was DDoS attacks that were causing this, or any other kind of attack. Mt. Gox was always under attack. We have data on that too. So you have to control for all these things. It's not enough just to show these tables. You have to do some formal analysis. So without boring you, hopefully, and I'm not going to spend too much time on it, we do something which is called a regression, where we look at the daily changes in price. First, we look at the dollar change in price. Okay, so dollars from day to day, the number of dollars from day to day. Back here, we said when Willie was active, on average, $21 a day, an increase in $21 a day. But economists and finance people more commonly look at the percentage change. In other words, the rate of return per the day. So we're also going to do that. So we're going to run two regressions. One, where we have the dependent variable, the actual change in dollars per day, the exchange rate, and the other is going to be the percentage change. Does everyone understand that? You guys in the back too? Nobody's using their cell phones. That's good. Okay, you're not either. Okay. Okay, so anyway, and then we're going to include some independent variables on the right-hand side. In particular, we're interested in when these bots were active. So Markus is a dummy variable that takes on a dummy variable is binary variable for those of you in computer science. It takes on the value 1 on the days Markus was active, 0 when he was not. I mean, we say it's a he, but maybe it was a she. Okay, but in any case, 1 and 0. Willie bot has the same kind of activity, 1 and 0, days that he was active, days he wasn't. And we also have detailed data on when DDoS attacks occurred. So we're going to look at those. We're going to put in dummy variables for the days they occurred and dummy variables for the day after. Because after the DDoS attack, you might expect that people would behave differently as well, and it might affect the price. I mean, you might be a little worried when these things get attacked. And finally, there are other kinds of attacks besides DDoS attacks. So the key thing here that we're trying to do is to control for anything else that it could have affected the price and see whether still the Willie and Markus bots affected the price. So we're going to do some formal analysis, and you don't have to understand anything about regressions. All you have to do is look up and see that coefficient associated with Willie is about 21 again. That means controlling for everything else on the days Willie was active. Okay, on the days Willie was active, the price went up by more than $21. It confirms what we saw when we just looked, we just played around with the data. Okay, that's what it confirms. And Markus had a smaller effect. Again, sort of $2, $3. But remember, the price was much lower on the days that Markus was active. So when we look at percentage changes, it's going to be different. But nothing else had any effect whatsoever on the price. And actually, the constant in the regression is 0, which means that on days when those bots were not active, no change in the price. No change in the price. Okay, now we go to percentage returns. Okay, first of all, notice that once you look at percentage returns, In the case of Markus, there's pretty decent percentage returns. If you look at the case of Mt. Gox itself, the coefficient is 0.037, which means 3.7% per day. Again, I'll take that on any asset, and I think all of you in the room will take that. And Willie, of course, had a higher percentage rate of return, more than 4% a day. Again, none of the other explanatory variables affected. These are big rates of return. It means on the days the bots were active, and the causal mechanism is simply Mt. Gox reporting this extra trading. In the first case, it didn't exist. In the second case, it was internal trading, signaling that there's a lot of interest going on. Everyone gets in, prices go up, and you know the rest of the story. Okay, and these manipulations had real effects. They kicked the rate up from $150 to $1,000 in a really short period of time. The other shocks didn't affect the price, okay? And you know what? Afterwards, the price collapsed. It actually fell not just by $500, it eventually fell down to $200. So the run-up from $150 to $1,000 and back to $200 looks like looks like without these bots, nothing would have happened during this period. And so now that brings me to today. Now I'm going to put the end of the graph in. Remember, at the first graph, I didn't show you up till the current time period, till the fall of 2017. But now you're seeing the price is not $1,000 anymore. I mean, you can see it went up and back down. It's up to of course, it goes up every day. It's up to $4,000. Look at what's going on in the green period as, compared to the blue period. Looks a little bit similar, right? Who knows what the heck is happening? Is something happening? Well, the cryptocurrency market is wild these days. I mean, Bitcoin went up by a lot. The other cryptocurrencies went up by even more. I have to tell you that during the period when during the period when the price rose from 150 to 1,000, again, that was a period when the other cryptocurrencies went up by even more. So the same kind of things are happening now. Bitcoin is losing market share, okay? But there's lots of other exchanges out there. And lots of currencies out there. Indeed, what we did, even though you guys are not going to see it because we just finished it about a day ago, what we did was we looked at all the coins that are active today, and we looked at all the volume and price changes for the history of these coins. And we found that there are about 300 coins with market caps between $1 million and $100 million. So anything less than 1 million is not that interesting. It means it's sort of something that's very marginal. And anything more than $100 million is a more thickly traded exchange. But look at the ones between 1 million and 100 million. And we find, okay, that virtually all these coins had days when there was a volume spike. By a spike, we mean that the volume on one particular day was 150% larger than the average volume of the month. So if the average volume per month was 1 million coins, that day there was a 2.5 million coins changed. Lots of volumes. And guess what we found out about the days when there was tons of volume? What happened to the price? Big time increases, about 25% a day. Okay? What happened to the price? On average when there weren't the spikes? Nothing. Small changes because, listen, there was some changes. I mean, things are increasing over time. But it's really, really quite amazing. And the markets are thin. There's 308 of these things. So we have a feeling that the same kind of thing could be happening today. We don't know. We're starting to look at the data. We're looking at all the coins. We have one disadvantage compared to the previous research. We can't link it up with individual traders. Hopefully, though, there's not exchanges that are manipulating things. It's a little bit harder now, right? The exchange market is more developed. That's important, by the way. Back then, Mt. Gox was really a dominant firm, and when there's dominant firms, we know that there can be, usually we think that there can be market power. We don't think about manipulation and cheating, but here that clearly went on. Nowadays, the exchange market is certainly more competitive, but it's possible that price manipulation is going on by big traders. If you read the financial literature, the over-the-counter trading, which means trading not through stock market exchanges, so if you and I would make a trade, or I would do it with a private venture capital firm, okay, those trades now comprise about 40% of all trades in the US. They used to be about 15%. And you know what? We find similar types of things in those stocks too, primarily the penny stocks. So it is possible. I'm not claiming it could happen. It is possible that these kind of things are going on today. So what do we learn from this? We learn that during this period, there was incredible price manipulation and once Mt. Gox went sort of belly up, and once these things stopped operating, the price went down to where it was before. Who knows what's going to happen now? I can't say whether there is price manipulation going on in these exchanges. All I can say is that they're really thin. So what to do about it? Because economists like to think about what should be done about these kind of things. And I think we have to think a little bit about regulations. Some early speakers talked about having transparency in the system and having trusted players, and I think that's important. But I think at some stage and point, if we want to move this forward, we're going to have some kind of regulation. There's going to have to be some kind of verification, for example, simply as to whether the volume is real volume or whether it's volume that's being promoted by insiders, as it was in 2013. I hope it's not. I hope that this is a genuine increase in asset prices for God knows whatever reasons. I can't figure out why. But I don't know. And you don't know either. But if you stay tuned, in a few months, we might be able to tell you something, because we're going to look at all 843 of those coins. Again, one thing very nice, every single trade. We also have the best RAs in the world that can manipulate data at unbelievable speeds. And so we think if there's price manipulation going on, even though we can't identify the individual traders, we think we're going to be able to identify it. So I know you guys want to get to the reception. I'm just going to stop early and say, if you have any questions, ask them. If not, thanks very much. Question? Okay, yeah, I see there's some questions, so you're going to be the first questioner. I got you. No, wait till the mic gets there. Okay. And then I can drink for a second. Just water, don't worry.
Oh, so there's a big movement towards a lot of these exchanges going towards decentralized exchanges like ETHFinex from Bitfinex and OpenANX from ANX, which are existing exchanges. How do you see this changing the landscape and fraud?
Okay, so what you're saying is that there's new exchanges which are open exchanges and might be more reliable, right?
No. So Bitfinex wants to create a new decentralized exchange.
Okay, and why do you think it might be better or more reliable or more trustworthy?
Or what do you see as the landscape?
Okay, I mean, we're starting to look at the exchange market too, and when you look at industries, there's usually tremendous change early on. The changes in the exchanges is just unbelievable. We have another paper that looks at exchanges. Tons of them fail. Tons of them enter. We haven't really gotten to any what economists call equilibrium. So I think it's still the wild, wild west out there. I mean, some of the exchanges, the ones that operate in the US, have to comply with like FinCEN, which some of you might know what that is, and they have to comply with anti-money laundering. But the exchanges that exist without offending any of these countries, China, Bulgaria, places like that, well, who knows what goes on there. So I think you're right that the exchanges play a key part, and until we have reliable exchanges, we're all going to be concerned about this. Yeah, maybe just take the microphone over there too.
So you mentioned that this came out during the Mt. Gox trial, but they're on trial for like fraud and embezzlement. Is price manipulation like currently illegal in any of these markets, or are they not going to go to jail for this specifically?
Okay, you're right. Generally, I mean, this is a crime if it's under a regulated market, and but nevertheless, in most countries, it's a crime anyway. So I don't know what's going to happen in the trial, but let's put it this way: I wouldn't want to be him. Okay, I don't think it's going to come out good for him, and I think there's been huge damage done by that. So we need to get some microphones over here to maybe one right here. I mean, if you're running around, do we have more than I can get? We're running. Okay. Maybe I don't need the microphone. I can pass this around and scream.
I usually look at the log price charts.
You can do that. We did that too. I didn't report it. It's the same.
Well, I had just a couple points. One is that the 2013.
By the way, one clarifying point. For those of you who don't know, sometimes you look at the log returns, okay, natural log of the returns, okay, and we find the same kind of percentage changes. Okay, so good point, though.
It's a great way to see over history when, relative changes. And it seems like to me that looking at the charts, 2011 reminds me a lot of what happened a couple years later. And I was wondering if you'd looked at 2011. And then my second point is actually today the log price looks very different in terms of the past bubbles. That you don't see a bubble in the log price currently versus what the kinds of changes you see in the log price in those other three incidents.
So interesting. So a good point was made that normally we also look at log prices. For our period of the data, it's the same. But the problem is we can't use 2011 data because we don't have the individual trading data. The Mt. Gox data dump was only in 2013. I see. Okay. And in terms of using it now, we're going to try to do things without the data dump, but we're going to look at exactly what you're saying. So good points. And you had another? Okay. So there's other questions. There's one over here. Okay, and thanks for being so alive. I didn't see a single person looking at their computer or their cell phone.
Thank you for the fantastic talk. I'm curious, right? I think this should be investor advice, right? And a lot
should be what?
Advice for investors. Can you rank all the currencies in terms of their potential for fraud, right? So basically, and make it. The result of universities with kind of specialties. Can you make this your center kind of an expert reference point in fraud propensity of certain crypto coins? So everybody would go to Utals, and check, what's the fraud level today at Bitcoin, things like that.
What we're going to do is, and we can't conclude that it will be fraud necessarily, but what we can do, and I think what should be done, and it shouldn't just be us doing that, even though you're right, we will do this. We will report all the coins, what happens, percentage change in volume trading every single day, and see if it's associated with percentage change in price. We're going to report all this stuff. There's another thing that's interesting to do. Some of the coins might be rising because they just have good characteristics. For example, they allow for an increase in supply, or they have a very friendly user community, things like that. We're going to try to get data on these variables too. But you're right. For investors, this information is important. Not that we're going to open a brokerage house or anything, or a reporting firm, but yeah, these information, and the information is available. Right now, all the information we're working at is in the public domain. Yes, turn around right here first. Here? Okay, well, you got about 2 or 3 more.
Hi. So you talked about price manipulation on public exchanges. Recently, we have seen exchanges also come out, for example, on Ether, like, for example, Ether Delta, or smart contract exchanges. Do you think these kinds of exchanges are susceptible to the same kind of fraud, given that they have a higher transaction cost for bots to basically spam the network with transactions to boost the price?
Okay, so first let me clarify and say I can't determine, I don't know anything about the potential for exchanges being fraudulent or not fraudulent, but you're certainly right. If the transaction prices are higher, okay, if there's a transaction price associated with this, it's probably less likely that that'll occur. But I can't say for sure. But these are important. It's important to know about the exchanges too, how they work. There's a lot we have to know as investors. Yes? I'll repeat your question. I don't know. And I don't know about this. So the question was about Zcash, which doesn't report, apparently, the volumes. So I don't know the volumes that are being traded. Is that what you're saying? Okay. I'm not sure about this particular coin, but virtually most of the coins we've looked at, we're able to get volume and price data. So I have a feeling that if you come back in a year, we might, or maybe less, we might have something to say about that.
All right. Unfortunately, that's all we have time for. Thank you so much.